Okay, so today we had a trend day on Tuesday. Index futures trended from the open all the way to the close, and there are several different types of trending days. And what I mean by that is how price action moves throughout the entire day. This was basically an open and continue to make higher highs, higher lows all day long, all the way to the close. And a trend day like that basically is very nice for trading because you can continuously get a lot of opportunities to be able to buy pullbacks and get in on the trend. Another type of trend A is when basically we make a strong directional move and then we go sideways and then we make another one towards the end of the day. And again, that's an up day too. Would be an up day as well. Basically, we open and close higher, close on the highs. That's two different types. There are other different types of trend days, but those are two different types of trend days that occur a lot on the index futures. So I'll cover a couple other things that just about anybody can use, regardless if you guys are using TradeStation or on indicators or anything that for trend days. Prior to doing that, I want to just talk quickly about this trading range that developed here after we had this little mini crash in the markets, and we've tested the lows and now we've built a nice base and we're trying to move higher. So this day here, yesterday we tested the top of this range, and so it was no surprise that we had some selling coming in. And today we broke out of that area. Now, those ranges, anybody that's day trades, they should be familiar or aware of those the tops and lows of trading ranges like that, or any key support resistance areas, because it'll help you understand price action as it's developing. On a yesterday, when we reached the top of that range, we started selling off, but there was weakness in the market even prior to reaching that area. Notice how either it was scaling in or shorted here and then shorted in again at the top. I'm not sure, but volume index pretty much was bearish all day long. As you can see here, volume weight is this line here, and with volume weight, when we gap up, if the volume weight is red, high probability chance that we're going to fill that gap. It didn't occur. It wasn't a fill during the day. In fact, we tried several times, but we moved higher. And I guess floor traders possibly could have wanted to take prices higher and just take some at the top of the range, get some stops, and then scale out of their longs. I'm not sure exactly what happens. Who knows? It doesn't really matter why we went up, but this volume index indicator down here, you can see volume index weight was red all day, and the volume index itself was very, very weak, and we reversed. In fact, with what I said about the gaps being filled, there was a nice short signal right here with the Z10 oscillator combined with our trending indicators, which occurred right at that area. Could have put you in to get the gap fill. In any case, my point is, yesterday, if you look at price from here to here, price looked pretty strong, but this indicator showed that that wasn't true. Now compare that to how weak price looks in this area compared to what the volume index is showing. And so this is one of my favorite indicators. Of course, I also use the tick bias is great for index futures, volume breadth, basically here, SDI. When I see this on the SDI just continuously expanding higher and higher, it's a great little indicator for trending to keep me on the right side and also hold on to winners. So that's the difference between today and yesterday's price action. Basically, you can see that in the volume index indicator, and so that was one of the clues that helped me with the trend. Okay, another thing is I like to look at all three of the index features so I'm looking at ESYM and Q, volume breadth on all three, very bullish. And as I said, the SDI, the same thing with volume index on all three, very, very bullish today. Yesterday, that same thing was not true. So going back to this chart here, looking for a breakout because we're building a bullish base here, you're looking for a breakout, but when we tested it yesterday, everything was weak. All the indicators I was looking at was weak. So I was not at all surprised that we reversed and filled that gap. Today, in contrast, what happened is as soon as we opened, I was a little cautious again because again volume weight was red, but within the first by 9:45 it was green, and so we were looking for a pullback to buy, and there was a lot of opportunities. And on trend days, as they're developing and you're seeing value move higher, one of my favorite things to do is to use the Z10 oscillator and the VB oscillator combined with basically the volume index, STI, and volume breadth, and look for long entries. Okay, now since I didn't know we were going to break out of that range today, but the possibility was quite high, what I like to do on days like that, if I get positioned here or if I get positioned anywhere early on, what I like to do is hold on to that trade for as long as I can, and I use a volatility implied volatility calculator basically, and that's how uh, I judge my basically profit targets based on that. I'm looking to capture 100% of the I want to get out of most of my position at 100% of implied volatility. So if I get long in YM or NQ or ES or all three, that's where I'm going to get out majority, because that's where a lot of people will get out, and possibility of a good correction occurs at that time. However, on a strong trend day like we did have today, you're going to get much more than 100%. So I like to hold a little bit more, and then what I'll do is get out at this second level. And building a calculator like this is very simple. You just need to know a little bit about VIX and how to calculate implied volatility based on options, so or based on the volatility index, and you can do that for basically all the index futures. It's a great way to exit your trades if you get in, for example, here as I did. Easy way to get out. Now, as I said earlier, there are a couple of ways that you can determine a trend day as it's developing, and it's always nice to have that bias, a bullish bias, ahead of time when you're coming in. But suppose that using a simple indicator like a value area, developing value area indicator like this, and I'm trying to get this so I can show it. Okay, so we opened up, and this white line is the point of control, and what we'd like to see is basically point of control making high, and then flat line, high, flat line, high, flat line. Once it flatlines, we don't want to see it drop down. Okay, so if once it gets accepted, in other words, we don't want to see it drop down. We just want to continuously see it. So what that's telling us is that price is pulling value higher, or another way of putting it is we're moving higher and price is getting accepted. Moving higher, price is getting accepted, and that's a healthy sign of the trend. Okay, so that's one of the easiest ways. Now you can use a developing value indicator like this, or you could use volume weighted average price bands. It's a little bit easier with this type of indicator unless you have a lot of experience. If you have a lot of experience with volume weighted average price, then that'll do fine too. So I still would recommend this one over that, but it really depends. Some people prefer the volume weighted average price bands, but this is one simple way. And then on top of that, what you can do is just a simple, okay, everybody knows trend, higher high, higher low is an uptrend. Okay, so every time we break a prior high, mark your highs, extend it to the right. You look for the test of it. Once the price tests it, you want to see price move quickly above it. In other words, you don't want to see price come down here and hang out for a long time, okay, below your support. A healthy trend will continue to break higher, come back test, continue to break higher again. Again, some profit taking, test prior lows, make sure there's no selling activity going on, and then move on again. And that's signs of a healthy trend. Strong directional move high is never too healthy, because markets get overbought quickly. So this is something very simple. Another thing I've always talked about is that in a nice trending day like this style of trending day where we have a lot of higher highs, higher lows, you want to see highs being put in place every 30 minutes, 40 minutes, 50 minutes. Okay, if it takes longer than that, takes longer than 60 some minutes, then you have some concern. So you want to see a high being placed right around an hour or shorter. The shorter the better. So you want to see continuously the market. That shows the aggressiveness of the buyers. You don't want to see a high and then we hang down below that high for 2 hours and then a high. That usually will form a reversal pattern. Okay, so that's pretty much it. I hope it helps.